There is a reason why gold bars are selling out at Costco within hours of being listed. There is a reason why central banks around the world are buying gold at the fastest pace since 1967. And there is a terrifying reason why the billionaires, the elites, and the smart money are quietly dumping stocks and moving into physical assets. They are not investing, they are evacuating. What you are witnessing right now is not a standard market cycle. It is not a bull run. It is the final warning sign of a historical pattern that is repeated before every major currency collapse in the last 500 years. They are preparing for an event that most Americans believe is impossible. But history tells us it is not only possible, it is inevitable. We are talking about a wealth transfer event similar to what happened in the United States in 1933. Before I show you the undeniable proof that we are repeating the 1933 timeline, I need you to understand one thing. The media is distracting you with stock market highs and employment numbers. They are keeping you calm while the exits are being sealed. If you want to know what is actually happening to your money, and if you want to be on the right side of history when the reset happens, make sure you are subscribed to this channel and have hit that notification bell. We decipher the economic patterns that the mainstream refuses to touch. Like this video and share it with someone you care about, because what I am about to reveal affects every single bank account in America. Let's go back to April 5th, 1933. Most history books gloss over this date, but it was the day the American government declared war on its own citizens' wealth. President Franklin D. Roosevelt signed Executive Order 6102. With the stroke of a pen, it became illegal for American citizens to hoard gold coin, gold bullion, or gold certificates. They were forced to turn their gold into the Federal Reserve in exchange for paper money that the government then immediately devalued. Why did they do this? Because the government was drowning in debt. They had printed too much money, and the only way to save the system was to steal the real wealth from the people and replace it with a devalued currency. Now, fast forward to 2025. Look at the numbers. They are screaming the same warning. The United States national debt has surpassed $36 trillion. We are adding $1 trillion to that debt every 100 days. The interest payments alone on our debt are now higher than our entire defense budget. This is mathematically unsustainable. There is no way to tax our way out of this. There is no way to grow our way out of this. There are only two options left for the government. Option 1, default on the debt, which would destroy the global financial system instantly. Or option 2, devalue the dollar, inflate the debt away, and force a currency reset. The elites know that option 2 is the path they will choose. That is why they are hoarding gold. They know that when the reset comes, paper assets like bonds and cash in your savings account will be the victims. Gold is the lifeboat. But here is the twist that makes 2025 even more dangerous than 1933. In 1933, they needed your physical gold to back the system. Today, they don't need your physical gold. They need your compliance. They need to trap your liquidity within the digital banking system. This brings us to the modern version of Executive Order 6102. It's not about men in suits coming to your house to take your gold coins. It is about a digital fence being built around your assets. We are seeing the implementation of laws and technologies that make it increasingly difficult to move large amounts of cash or to hold wealth outside of the traditional banking system. The introduction of bail-in laws, which were quietly passed years ago, allows banks to legally take depositors' money, your money, to save themselves from insolvency. This isn't a conspiracy theory. It is written into the Dodd-Frank Act. It happened in Cyprus in 2013, and the pattern suggests it is coming here. When you see Mark Zuckerberg selling millions in Meta stock or Jeff Bezos unloading billions in Amazon shares, you have to ask yourself, what are they buying? They are buying land. They are buying commodities. They are buying assets that cannot be printed by the Federal Reserve. They are exiting the paper casino before the house of cards collapses. The pattern we are tracking is called the Great Debasement. It happened in Rome. It happened in Weimar, Germany. It happened in 1933 America. And it is entering its final acceleration phase right now. The hoarding of gold by the elites is not greed, it is fear. They know the dollar is on life support. The Petrodollar agreement with Saudi Arabia has effectively ended. The BRICS nations are accumulating gold to launch a competing currency. The dominance of the US dollar is under attack from every angle. If you are holding all your wealth in US dollars, or in assets denominated in US dollars like standard 401ks, you are sitting in a burning building. The elites have already smelled the smoke and are heading for the exits. The gold rush you see at Costco is just the tip of the iceberg. It is the visible sign of a much deeper systemic panic among those who understand the math. So, the question is not, will gold go up? The question is, what is gold warning us about? It is warning us that the trust in the government's ability to manage the economy has shattered. When trust breaks, currency fails. And when currency fails, gold is the only thing that remains. But there is another layer to this pattern that is even more disturbing. It involves the timing. Why now? Why is this acceleration happening in 2025? To understand this, we have to look at the 80-year institutional cycle. History repeats itself roughly every 80 years, a human lifetime. 1781 Revolutionary War ends, 1861 Civil War, 1941 World War II entry, and now 2020 seconds. We are in the fourth turning, a period of crisis where the old order is destroyed to make way for the new. During these fourth turnings, wealth is not just lost, it is transferred. It moves from the unaware to the prepared. It moves from those holding paper to those holding hard assets. The elites are students of history. They know this cycle is ending. They are positioning themselves to own the new world that comes after the dollar crisis. By hoarding gold, they are ensuring they have a seat at the table when the new monetary system is written. You need to understand the mechanism they will use to trap you. It is called a bail-in. In 2008, during the Great Financial Crisis, we saw bailouts. The government used taxpayer money to save the banks. The public was furious. So, in 2010, they passed the Dodd-Frank Act. They told you it was to punish the banks and protect the people. That was a lie. Buried deep within that legislation is the legal framework for the next crisis. It states that in the event of a bank failure, the bank can legally seize the funds of its depositors to recapitalize itself. Let that sink in. When you deposit money into a bank, you think you are storing it in a vault. Legally, you are not. You are lending money to the bank. You become an unsecured creditor. If the bank goes under, you are last in line to be repaid. Your savings are converted into bank equity shares in a failed bank. This is not a theory. This is the law of the land in the United States, Canada, the UK, and the European Union right now. The trap is already set. This is why the elites are moving into gold. Gold has no counterparty risk. If you hold physical gold, it does not matter if the bank fails. It does not matter if the dollar collapses. It does not matter if the government defaults. Gold is the only financial asset that is not simultaneously someone else's liability. In a world drowning in debt liabilities, an asset with zero liability is the ultimate prize. But the domestic banking threat is only half of the equation. To see the full scale of this 1933 style warning, we have to look overseas. We have to look at what the enemies of the US dollar are doing. China and Russia are aggressively dumping US treasuries. For decades, China recycled its trade surplus into American debt. That era is over. They are selling US debt and using the proceeds to buy gold on a massive scale. Why? Because they are preparing for a post-dollar world. They are building a financial fortress that is immune to US sanctions and US inflation. The BRICS nations, Brazil, Russia, India, China, South Africa, and their new members now control a larger share of global GDP than the G7 nations. They are openly discussing a new trade currency backed by gold. If this happens, the demand for US dollars globally will evaporate. When foreign nations stop buying our debt, the interest rates in America will skyrocket. The Federal Reserve will be forced to print trillions of dollars just to buy its own government's bonds to keep the system from imploding. This is the doom loop, and the inevitable result of the doom loop is hyperinflation. This is exactly what happened in Weimar Germany in 1923. It wasn't that they didn't have enough money, it was that nobody wanted their debt. The currency became worthless. The elites see this global chessboard. They see that the exorbitant privilege of the US dollar is ending. They know that when the dollar loses its status as the world reserve currency, the standard of living in America will collapse overnight. The purchasing power of your savings will be decimated. That is why they are not waiting for the crash. They are front-running it. They are trading their dying paper for living gold, while the price is still manipulated lower by the paper markets. Now, let's talk about the endgame. The solution the government will offer when this crisis hits. They will not offer a return to sound money. They will offer the ultimate control mechanism. Central bank digital currencies, CBDCs. This is the digital equivalent of Executive Order 6102. A CBDC is not like Bitcoin. It is a programmable, centralized token issued by the Federal Reserve. It gives the government total visibility and total control over every single transaction you make. They can impose negative interest rates, meaning your money shrinks if you don't spend it. They can put expiration dates on your funds. They can freeze your ability to buy certain goods if your carbon footprint is too high, or if your political views are deemed dangerous. This is the final stage of the pattern. Stage 6. Totalitarian control through currency. In 1933, they took the gold to force people into paper. In 2025, they will crash the paper to force people into digital chains. They will present CBDCs as the savior from the banking crisis and hyperinflation. They will say, the banks are unsafe. Use this direct account with the Fed. It's safe. It's fast. But it is a trap. Once you are in the CBDC system, financial privacy is dead. Financial freedom is dead. This is why gold is the enemy of the CBDC state. Gold is private. Gold is untraceable. Gold is freedom. Holding physical gold is an act of rebellion against a surveillance state. It is the only way to transact outside of the digital panopticon they are building. The elites know this. They are not buying gold just to get rich. They are buying gold to remain free. They are buying gold to ensure that no matter what the government does to the currency, they still have purchasing power that cannot be deleted with a keystroke. Look at the timeline. The Federal Reserve launched FedNow, the infrastructure for a digital dollar, in 2023. They are running pilot programs right now. The banking crisis of March 2023, where Silicon Valley Bank and others failed, was a stress test. It was a preview. The consolidation of small banks into the too-big-to-fail giants is by design. They want fewer banks, so it is easier to transition everyone into the centralized digital system. You might be thinking, they can't do that here. This is America. That is exactly what the people thought in 1933. They thought the Constitution protected their property. They were wrong. The pattern shows that when an empire enters its final debt spiral, the government becomes a predator. It consumes the wealth of its citizens to survive just a little bit longer. The divergence between the paper price of gold and the physical demand for gold is the smoking gun. The paper markets in London and New York are suppressing the price to keep the illusion of a strong dollar alive. But the physical markets in Shanghai and the private vaults in Switzerland tell a different story. The physical metal is disappearing. It is being drained from the west and moving to the east. It is moving from the public hands to private hands. We are approaching a break point, a moment where the paper manipulation fails and the true price of gold is revealed. When that happens, it won't be a gradual rise. It will be a vertical revaluation. Overnight, gold could reprice to $5,000, $10,000, or even higher to account for all the paper money that has been printed. Those holding paper will be wiped out. Those holding gold will not only preserve their wealth, they will see it multiply in purchasing power relative to everything else. This is the wealth transfer. It is happening right now, under your nose. The window to convert your paper liabilities into real assets is closing. The premiums on physical coins are already rising. The delays for delivery are increasing. The system is blinking red. So, what does the day of reckoning actually look like? Based on the historical pattern of 1923 Germany, 1946 Hungary, and 2008 Zimbabwe, it does not happen on a Tuesday morning with a scheduled press conference. It happens in the dark. It usually begins on a Friday afternoon, after the markets close. You will hear rumors of a bank holiday or a technical glitch in the payment systems. By Monday morning, the world is different. When the markets reopen, the currency has been devalued by 20%, 30%, or 50% overnight. The price of imported goods skyrockets. The gas stations run dry because suppliers refuse to accept the worthless currency. And the ATMs? They are either empty or capped at a withdrawal limit that won't even buy a loaf of bread. This is the moment of maximum panic. This is when the 99%, the people who ignored the warnings, who laughed at the gold bugs, who trusted the Federal Reserve, wake up to a nightmare. They will rush to the coin shops only to find the doors locked and signs that say out of inventory. They will try to buy gold online only to see delivery delays of 6 months or premiums that are double the spot price. At that stage, gold becomes unobtainium. You cannot get it at any price in paper dollars. The only way to get it is to have it already. The elites know this. That is why they are buying now, while the window is still open, while the price is still suppressed by the paper derivatives market. They are securing their position before the panic stampede begins. You must understand that the government cannot save you from this. In fact, during the final stages of a currency collapse, the government becomes the enemy of your wealth. They will implement capital controls to stop you from moving your money out of the country. They will implement price controls that lead to shortages. They will demonize anyone holding gold or Bitcoin as hoarders or economic terrorists. We saw this rhetoric in 1933, and we will see it again in 2025. So, what is your action plan? How do you prepare for a 1933 style event in the modern age? First, you must become your own central bank. This means eliminating counterparty risk. Do not rely on paper gold like ETFs, GLD, or SLV, or unallocated accounts. In a true systemic collapse, those funds have force majeure clauses. They can settle your claim in cash, worthless cash instead of physical metal. You need physical possession. You need coins and bars that are within your immediate reach or stored in a private, non-bank vault in a jurisdiction that respects property rights, like Singapore or Switzerland. Second, diversify out of the dollar immediately. The pattern shows that during a hyperinflationary event, all tangible assets rise against the currency. Gold is the king, but silver is the prince. Silver is currently historically cheap compared to gold and serves as a transactional metal for smaller purchases if the digital system goes down. Land, ammunition, non-perishable food, and energy independence are also forms of wealth preservation. Third, get out of debt, but be strategic. In a high inflation environment, fixed rate debt like a 30-year mortgage can actually be an asset because you are paying back the bank with devalued dollars. However, variable rate debt, like credit cards or adjustable mortgages, is a death sentence. The banks will jack up rates to 20%, 50%, or 100% to try to stay ahead of inflation. Pay off variable debt now. Fourth, keep some cash, but not as a store of wealth. Keep cash only for the initial weeks of the banking freeze. When the ATMs stop working, cash will be king for about a month before it becomes trash. Use that window to secure final supplies. The most dangerous bias humans have is normalcy bias. It is the belief that because things have been stable for the last 40 years, they will continue to be stable forever. But history laughs at normalcy bias. The Roman citizen in 400 AD thought Rome was eternal. The British citizen in 1910 thought the sun would never set on the empire. The American citizen in 1928 thought the stock market would only go up. They were all wrong. We are living through the end of a monetary cycle. The math dictates it. The debt dictates it. The geopolitical shifts dictate it. The elites are not guessing. They are executing a plan. They are hoarding gold because gold is the only bridge that crosses the chasm from the old dying system to the new one. If you ignore this warning, you are betting your family's future on the competence and honesty of the Federal Reserve and the U.S. government. You are betting that $36 trillion in debt doesn't matter. You are betting that history is wrong. That is a bet you will lose. But if you take action, if you follow the pattern, you have the opportunity not just to survive, but to thrive. When the dust settles and the new currency is introduced, likely backed by a basket of commodities or gold to restore trust, those holding the real assets will be the new aristocracy. This is the greatest wealth transfer in human history. You just need to decide which side of the transfer you want to be on. Do not let the media gaslight you into complacency. Do not let the temporary dips in the gold price shake you out of your position. Those dips are gifts. They are the final opportunities to exchange paper promises for metallic truth. History has written the script. The actors are on stage. The curtain is about to fall on the US dollar era. I have decoded the pattern for you. Now, the responsibility to act is yours. This channel exists for one reason: to wake up the few who are willing to listen before it is too late. We will continue to track every move of the central banks, every hidden law passed by Congress, and every signal from the bond market. If you found value in this analysis, if you want to be armed with the truth while others live in denial, you know what to do. Subscribe to The Pattern Decoded. Hit the notification bell so you are alerted the moment we release a new warning. Share this video with your family, your friends, and anyone you want to see make it through the coming storm. The clock is ticking. The gold is disappearing. The warning of 1933 is ringing in our ears. Don't say you weren't warned. I'll see you in the next video, where we will expose the specific date the elites have circled on their calendars for the next market crash. Until then, stay skeptical, stay prepared, and watch the pattern.